And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge Show, the show where we bring you where the action is in the broader markets. Certainly had a nice week this week as it relates to the markets. We did have the S&P and Nasdaq hit a new all-time high. I'm going to share with you why that took shape, and then also where we are seeing new vibrancy given the backdrop for the markets. So first up, taking a look at some of that news that drove price action last week, and certainly front and center in the beginning of the week, was the fact that a truce was declared between Iran and Israel. Now, that news in turn pushed the price of oil quite a bit lower. And then also from there, we did see interest rates drop. Quite simply, a lower price in oil, certainly as much as it decreased, removes that fear of high inflation. And that in turn pushed several sectors and industry groups up to the forefront. We are going to take a look at that as we move through today's show. Also on the news front, we did hear that Trump today called off negotiation and tariff talks with Canada. We did see a drop midday today. However, the markets recovered somewhat. We can take a look at that as well when examining the broader markets and where they closed for the week. Next week is a holiday shortened period, but of note, we will get the employment data for June. You'll want to be aware of that. So let's go ahead and jump right in and take a look at these charts. And here we are, daily price chart of the S&P 500. And here is a nod to that new high in price in the S&P 500. And also we do have a positive RSI and a nice MACD crossover, black line up through the red, very bullish, signaling a new uptrend. And then two, it is up here in positive territory. So we are setting up really quite nicely. I'm going to talk about this in my MEM Edge report. As far as historically what occurs after the markets hit a new high, and it is generally quite positive. From here, let's take a quick look at an intraday chart, and you'll see that we did have that news relating to Canadian talks deteriorating, and then into the close, we did have a nice rally. So we are in good standing there with the S&P 500. Likewise with the Nasdaq. We also have the Nasdaq hitting a new high as well. We can take a look at that index, and here we are with that move on Tuesday relative to the fact that there was a truce declared in the Middle East, and in turn we did see that pretty explosive rally there in the Nasdaq as well. Now let's go ahead and drill down behind the broader market charts and take a look at the strength in these sectors. And we are looking at a 2-month daily price chart view, and they're sorted by that relative strength indicator. It's not a whippy movement, but it will highlight where the current strength is in the markets. Let's take a look. We have technology and communication services up here at the forefront, both groups handsomely outperforming the broader markets. And we have the S&P positioned in this third spot. But as we move through, we do also have industrials, financials, and discretionaries up here at the forefront, consumer discretionary. And as those of you may be familiar, is the fact that each of these sectors is economically sensitive, so that decline in interest rates is going to be really evident as it relates to where these money flows are taking shape. And again, these economically sensitive areas are up here at the forefront. Now, down here in this lower right quartile, we can take a look at these more defensive areas, REITs, staples, and healthcare languishing. And then, of course, we did see that drop in the energy industry group subsequent to that sharp decline in the price of oil. So let's go ahead from here. We're going to drill down further so that we can get more refined as far as precisely where that strength is, whether it is in technology or elsewhere. Again, a 2-month daily price chart view of ETFs that I find very useful as far as staying on top of what is taking place. Here we have at the forefront semiconductors, and they had a very good week last week, up almost 6.5%. Here's that gap up on Tuesday on the news and a subsequent advance beyond that. Lots of good news in the group. Let's take a look at a company that announced their earnings last week, and it is a bellwether name for the overall technology group. Their earnings are very, very closely watched, and it is Micron Technology. And they did come out with record bookings of their AI-related product. In turn, that gave an additional boost to these semiconductor stocks, which are sitting up here at, let's go ahead and pull up a weekly to get that longer term view. We're not quite at these prior peaks from the end of 2024, but we certainly are in good standing on that weekly chart with the MACD just entering into positive territory. And when we talk about economically sensitive areas, semiconductors are front and center as the economy is expanding. You will see movement into these chip stocks. Quite simply, they are infiltrated in pretty much every industry now. So that is another reason that we are seeing a nice movement into those semiconductor names. Let's go ahead and move through. Up here, software is another group that does fare well as interest rates pull back, and other certainly reasons as well. We talked in the past about Oracle and some of these other major software companies coming in with really nice numbers. Microsoft among them. They were the first to report and are really faring quite well. Another economically sensitive, we talked about financials. This is Regional Banking ETF, and the ticker is KRE. And you can see that I'm just going to pull down here and make sure that I have all those moving averages in here, and they are in fact here. Ideally, what is shaping up is this nice double bottom formation. We did move back above this 200-day simple moving average in line with a nice MACD crossover, indicating a new uptrend. Lower interest rates, of course, good for these bank stocks. And in fact, this is a theme that I will be taking us through as it relates to new stocks that are coming into play, this downtrend reversal concept, as these sensitive names do come back into play. Small cap, that's another area economically sensitive. A lot of these smaller companies do need to borrow funds in order to escalate growth. So that is the positive fact there. We can see that the IWM, this is the Russell 2000 small cap index, and it too has advanced back above this 200-day simple moving average with nice bullish characteristics. And also taking a look at some of these other areas that are beginning to shape up. This is IHI, the medical devices group. And you can see we had that sharp advance on Tuesday and then held ground here. I'm going to be sharing a couple of names from that group that are beginning to wake up. XRT is the S&P retail ETF, and it was up rather modestly, but there certainly were other areas in the consumer discretionary space, and I'll share with you names in that area as well. And here is an oldie but goodie industry group that is beginning to awaken, and this is XHB is the ETF for the home builders group. And it's another area that fares well, of course, making mortgages more desirable with the lower interest rate backdrop. And there are other characteristics as well. I'm going to share with you a couple of names that are beginning to exhibit interest, and I would put them on your watch list. Moving through, we can see the areas that were down. Gold, which had been that safe haven play, certainly during the Mideast tensions. And you can see that gold is down for the week, losing its luster. And good news here, volatility dropped as well. We closed the week down here at 16, which is fantastic. We are below that 18 level, and it's indicating that these high fear levels are receding. So let's go ahead from here, and I'll share with you one other name that may, at the very least, be on your watch list. Perhaps some of you own Palantir. I'm just going to pull up the daily chart here and share with you the fact that the stock did drop on very heavy volume today. It was down almost 9.5%. We now have a negative RSI, but this high volume does indicate potential institutional selling of the stock. No real news. A lot of the talk was that it was profit taking, giving the stock's very sharp advance. This is one of the many winners on my MEM Edge report, but more to the point is taking a look here at this 15-minute chart. You can see that we had heavy selling into the open, volatility, and then this is the last 15 minutes today, another big sell order, which of course has brought the stock down. I'm going to be talking about it in my report as far as how to handle this because it is such a bellwether tech name. Now, I did mention to you that I wanted to share with you this concept of downtrend reversals. Let's go ahead and start with Nike. And this, of course, the footwear and apparel manufacturer, we can see that Nike had this nice gap up to a close back above that 200-day simple moving average, very heavy volume, RSI, MACD in positive territory. The company did come out with their earnings. They came in with earnings above estimates. This gap up is despite the fact that management guided growth as being cautious going forward due to the tariffs. However, they did address how they intend to overcome the price increases, but net Nike only imports about 16% of their goods from China. So whether it was that fact or the CFO's comments on how they were addressing the potential tariff hit, the stock did get a number of Wall Street upgrades today, and we did have a move back above this 200-day simple moving average with bullish characteristics on that MACD and RSI. Now, from here, we are going to take a look at a stock from my MEM Edge report. I'm going to share with you this concept of a downtrend reversal, what that looks like and how that can shape up. Let's go ahead and put a 200-day simple moving average on here. And what I did want to highlight, I'm going to mark this up, and as we move through, I'll share with you other names that are currently exhibiting that downtrend, those characteristics of a potential downtrend reversal. So with AVAV, I will tell you that we added the stock at this point. Now, we did have a move back above that 200-day simple moving average. And if we take a look here, the volume really wasn't there. So from my many years of looking at charts, examining these downtrend reversals, breakouts, and so on, for me, when a stock first does break back above this key area of potential upside resistance, I will want to get that volume as confirmation. In other words, buyers are in, there's clear-cut interest in the stock. And then also one day does not a downtrend reversal make. You will want to get that confirmation. So hence, we did wait a couple of days. Here's that high volume characteristic as we trade now for several days back above this 200-day simple moving average. The stock going into this week had advanced 26%, but a couple of other characteristics that can be highlighted is the fact that on that move back above that 200-day, we did break out of a 2-week base. We had positive RSI and a positive MACD. So we had quite a number of characteristics that made this stock quite compelling. And then also for me, I want to make sure that the fundamental backdrop is there. So with AeroVironment, the company is a defense name, and they are most renowned for their drones. And the drones are, by and large, very actively being used. The company also is at the forefront relative to that drone technology. They're a leader in the group and they have seen record growth. So that is what took place here. The company reported record earnings going into the third quarter. And then also we can see that the stock did advance beyond that midweek report on Wednesday. This is that gap up. I did advise that the stock was poised to trade higher. Take a look at this super high volume and continued high volume for the stock. We're also going to later take a look at using historical precedent as your guide. And we've had a number of names gap up on earnings this earnings season, and that is certainly a good place to start. So now we have those qualifications for a downtrend reversal. We talked about the fact that it did move back above this 200-day simple moving average, and there have been periods where a move just above the 50 is ample enough. But for this particular name, it was that 200-day, and then also that strong fundamental backdrop as far as their product mix and so on. So let's take a look at some names that are beginning to awaken. They are not going to be as exciting as AVAV last week because they are only now potentially in beginning stages. So first up here is FedEx. This is an example of a stock that has not yet made it back above that 200-day simple moving average. We can see it's bouncing around a bit here, but this also was earnings driven. The company has been streamlining their corporate backdrop, and the fact is we did get some Wall Street analyst upgrades on the news. We're not quite out of the woods yet. I would like to see the stock break above this May peak in price, a nice base breakout, and get more volume, but we are seeing volume on the buying day as well. The other action that you can take when you see these stocks move is take a look at some of the names that are in that industry group. Now, this is not a direct competitor. Of course, FedEx is a delivery service, but we can take a look at some of these logistics companies, XPO among them, a well-known logistics company. If there is a sense that the economy can expand with a declining interest rate backdrop, we will need to have goods delivered, and in turn, these logistic companies moving back into play. So let me go ahead and mark this chart up for you because I talked about this before, that concept that you can have that gap up, but you do also, in addition to wanting those fundamentals to be in place, you also want group-wide movement. In other words, it's not just that particular stock. There is positive bullish movement elsewhere in the grouping because of dynamics fundamentally, whether it is economically or otherwise. So here we are with a positive RSI. Take a look at that volume today, and I will tell you this is a well-respected Wall Street firm upgrade that did help this stock advance. We are a hair away from a 6-week base breakout. So setting up there really quite nicely, definitely one for the watch list. Another stock that is in that very same group as XPO is CHRW, also seeing a nice uptick. This is all about analyst upgrades to the group. Now, this one does require more work, certainly from my experience here, but we can see that a sharp advance today, nice volume on the advance. We can also see that this MACD black line is poised for a nice crossover, which would signal a new uptrend. And now we do also have a positive RSI. Let's go ahead and take a look at another group that has been languishing, but we are starting to see names pick up. We did see Nike. Let's take a look at another couple of consumer discretionary names. First up here is SN, and they do manufacture and distribute products, mainly home products that are needed, vacuum cleaners, kitchen appliances, and so forth. So what I did want to highlight here is the fact that the stock is in the potential beginning stages of really reversing that downtrend to a point where it could be sustainable. We can see it's sitting here just below that 200-day simple moving average. Take a look at that MACD poised for a nice black line up through the red, and then we have a nice bullish RSI. So again, I would need to see it trade back above that key potential area of resistance and keep that volume nice and high, indicating strong investor interest. A couple of these restaurant names that are on the move here as well. Let's take a look at Chipotle. And the reason I'm really intrigued by this stock is the fact that it has historical precedent. Let's go ahead and pull up a monthly. And that precedent, I mean, it has precedence to have that capability to really outperform once it does move into a bullish position. A lot of that having to do with earnings, because oftentimes companies will report 4 quarters of strong earnings, and then the comparison will get very, very tough as far as the year-over-year growth. So we could be in that growth stage now. We can see with Chipotle, again, just marking that 200-day simple moving average. We do have that positive RSI and that positive MACD, and we're seeing pretty decent volume here on the buying. So a couple of characteristics that are setting up really quite nicely here. Another name in this space is a name that does have really good earnings expectations, but the stock is in essence DOA. The interest is not there. And this is something that I talk about quite a bit in the sense that a company can come out with good numbers, but if the market, there's something that has them not interested, it's not going to make a difference. That's why these charts are always so valuable as far as marrying them with the fundamentals. So with Cava, we have a lot of work to do. You can see that we did close back above that 21. We will need to get at least back above that 50-day simple moving average, get that MACD up into positive territory. Now, that's not as strongly needed, but we are getting that nice crossover, which is the beginning stage. But we do need to see that RSI get into positive territory. So one for the watch list there, keeping an eye on that one. And then another name in that consumer discretionary is RL Polo Ralph Lauren. And a little different view here, but it is showing you the fact that we did get this pullback in these discretionary names, but moving back into favor. The company has really great numbers, and we're not talking about a down and out downtrend reversal, such as down here. You can see that we pulled back below this 10 and 21-day simple moving average, really allowing the stock to pull back from this overbought position, letting some air out of the tire, as I like to say. So with this move back above these shorter term moving averages, take a look at that RSI, and we are on the cusp of a MACD crossover. So lots of interesting characteristics in that name. From here, we can take a look at a software stock. Now, I do want to mention some of these down and out areas, names. For instance, let's go ahead and take a look at IGV again. That's that software ETF, and you can see it's been a nice winner coming out of that bear market. But from here, we're going to take a look at a former leadership software name, ServiceNow. When you see these names that have not participated with their industry group, with the broader markets, they are not, for me, going to hold quite as much allure unless there is a significant shift in their growth outlook. There would need to be a driver. So, but I do want to highlight NOW because, again, we broke back above these shorter term moving averages. Take a look at that MACD on the cusp of crossing over, and we do have decent volume on this rally last week. It did push that RSI into positive territory. So it is on my watch list. Again, I'll go ahead and pull up a weekly chart to share with you that predisposition to outperform when it gets going. Another name that we can look at in the healthcare space, ISRG, very familiar with this stock in the sense that it too has very strong historical precedent. This has resided on our MEM Edge list, certainly until it broke back below. This is a weekly chart of Intuitive Surgical. And what I wanted to highlight here is I did share with you IHI, the fact that we are seeing vibrancy sneak back into the medical products space. ISRG is a bellwether name in that industry group. So you can see we are back above these shorter term moving averages. We do have that MACD crossover, the RSI in positive territory. Now, of note, and this is something else for me that is very important as a backdrop, this gap down, taking us back to the beginning of this month, was all about analyst remarks that there are competing companies in Intuitive Surgical. For years, they've been the leader in robotic surgical devices. And with the advance of AI and certainly other technologies, there currently are competitors that are coming into the space. So my knowing that would have me temper any move into this stock, but it is on my watch list, keeping an eye out. Want to see the higher volume days on your rally days as opposed to these red bars that show higher volume on selling. Another name, taking a look here, we talked about home builders. Let's take a look. The names that are popping up in this group are smaller cap names. Now, this is CCS, Century Communities. This is another name that going back historically has made it onto that MEM edge list. But what I wanted to highlight here is we have that MACD going into positive territory, a bullish RSI. We are back above that 50-day. But when you have these very lengthy declines, it oftentimes will take several attempts before it sticks as it relates to that downtrend reversal. So from here, we can take a quick look at the weekly. Now, the weekly chart's going to give you nice insight into the longer term outlook for the stock. You can see that we got into a very oversold condition on that weekly. And from here, we are emanating higher. So we have a couple of characteristics on this longer term chart, interesting and compelling, with that MACD trending higher, likewise with the RSI. But again, I would need to see more in order to provide me with that confidence that a new uptrend has developed. If you are interested in that, if you are a longer term investor, when that RSI got into positive territory, we did move back above that 50. So that combination is going to be more enticing, certainly as a longer term play. Another housing name that is on the move, and this also is a small cap, probably about a 2 billion builder that is, I believe, in Atlanta and down in that area. But if we take a look at this stock, we did dip above that 200-day simple moving average on Tuesday and then gave it back. So it's still marking time, but we do have bullish RSI and MACD. So certainly on the watch list, keeping an eye on that overall industry group. The stocks are very, very cheap. GRBK is trading at 8 times on the multiple. CCS is trading at 5 times their price to earnings. So that's another characteristic that certain investors would find quite compelling. Bank stocks here, let's take a look at these downtrend reversals. We looked at KRE, economically sensitive, similar to home builders, and we can see a couple of names here that are exhibiting similar characteristics. Keycorp, KEY. Here's a gap up on Tuesday amid that drop in interest rates that pushed the stock out of a nice base into an uptrend. So also from here, I did want to talk about using history as your guide. Now, I did mention that earlier today. So what I want to share with you is a stock that is on the move. Those of you who have not seen my show from last week, I would urge you to do so. We talked about vibrancy in the cryptocurrency space because of this stable coin bill that was passed. And this is one of the names I highlighted. Here we are with Coinbase Global, and they, of course, are a cryptocurrency exchange. And you can see this stock had a sharp advance into a base breakout. Now, from here, I am going to add a 5-day simple moving average. Quite simply, when a stock gets into an explosive move, nice high volume, that 5-day is going to be quite useful as far as identifying pullbacks that could be buy points. But today I did want to highlight using history as your guide. Cryptocurrency also on the move higher, but Coinbase had another period where it advanced quite sharply. And this is last November. Some of you may recall after Trump was elected, we did see a big move into Coinbase and then also cryptocurrency stocks because there is a sense that Trump is going to be more relaxed as far as regulations in this space. It's an area that he has embraced. So again, history is your guide on this gap up and advance. Really, what I'm on the lookout for is if you own coin or if you are thinking of entering it, you want to have a game plan for the eventual potential pullback in the stock. So first up, the stock did close below this 10 and 21-day simple moving average. We did start to see a pickup in volume in selling going into this rollover. And your first signal is going to be a MACD crossover. So you can see the deterioration that took place, not saying it will occur again, but when you see this type of price action, it's really quite helpful to have precedents as your guide. And that's it for this week, everyone. I hope you have a wonderful weekend and a great holiday next Friday. If you haven't already, go ahead and hit that like button if you like what you've seen. Also, subscribe to Stockcharts.com's YouTube channels so you can be alerted to future videos. And of course, as always, take a look at Stockcharts.com's product lineup as well. I'm going to look forward to seeing you here again next week.